this business about Goldbach levels.
Now, in this video, I'm going to break down some trades from my playbook so that you can fully understand the entry criteria for the golden bullet and variations of the golden bullet. I'll also go through some trades from my book of truths to show you the golden bullet trades that you should not take because they aren't true golden bullet trades. By now, you should have seen the live trade example where I execute the golden bullet on Euro USD. If you have not seen that video yet, then please come back to this later and watch that video first. This is the trade that you should have already have seen. So let me go through aspects of this trade so you can really internalize what you should be looking for in your setup. So firstly, we only trade Euro USD and GBP USD using the basic principles I've outlined in this course. Yes, the golden bullet does work for other assets like NASDAQ, but as of now, the course just goes through Euro USD and GBP USD. Whenever you are executing a golden bullet, you are always on the 27 power of 3, and you are always using the 5-minute time frame using the forex.com chart. The forex.com chart will give you the true prices, and then Goldbach will make a lot more sense. Now, the first thing we are looking for is we are looking for the 5-minute candles to be sensitive to any of these GB levels. Okay, this is how we know time and price is coming together in order to execute an algorithm on the 27 power of 3. Now, what do I mean by sensitive? Any of these candles, we are looking for at least 2 instances where the high or low, so the wicks of the candles, all the bodies, the open or close, touch a GB level exactly. So there's an example here. 1, there's here, 2, 3, 4. In this way, we know that the algorithm is now referencing the 27 power of 3. I always get the price tool, click on a wick, get the exact price, and then hover over the indicator GB level and confirm the price is the same. If the price is exactly the same, then I am confident that the algorithm is referencing the 27 power of 3. However, we never look for sensitivities on the low or the high, because the low and the high can be shared with other power of 3 numbers. So the 27 low may be shared with the 87 low. It will definitely be shared with the 9 low, right? So we only care about these intermediary levels, right? So that's the first thing we confirm. Once we have sensitivity, we are waiting for a sweep of liquidity. In this case, we had a sweep below the low. Okay, once we have a sweep, we then check that an order block candle formed in the order block GB level, and critically the candle body, there must be a decent candle body in the order block GB level. Once we've confirmed that, we need a fair value gap in the fair value gap GB level. Now we have to wait for this candle to close before we look to enter a trade. We cannot enter our trade when we have a gap and this candle has not closed, because this candle could easily reverse and close out the gap. Once this candle closes, we put our limit order at the fair value gap GB level. Never at the visible fair value gap, always at the fair value gap GB level. We always have our stop at the low, so not the candle low, always at the GB level low, and we always TP at EQ. This way, we always have an RR of 1.93. I know you'll be tempted to put your entries in the visible fair value gap, but the issues I had with doing that was I'd see so many cases where price would touch the fair value gap, GB level exactly, and take off, right? We will start missing trades if we do that. Have a look at my complete playbook on the Discord server, and you'll see so many times where price goes into the fair value gap GB level, doesn't quite make the visible fair value gap, and takes off. This will ensure you get into a trade. Okay? Do not be tempted to move your TP either. Always have your take profit at equilibrium. This is the higher time frame. So you see you had the raid here, and you had the order block, fair value gap, and we TP to equilibrium. Our drawn liquidity was the Asia highs. Now, during the trade that you would have seen in the video, this candle was extremely bullish, and it felt as if that we should have held our trade until the opposite order block because we had already TP'd at EQ. But what happened? We reversed, and then we would have been stopped out. This is why we always take profit at equilibrium. This is the higher probability place to take profit on an algorithm 1 and an algorithm 2. This is essential. This is an example of a golden bullet on GBP USD. Okay, you'll see some sensitivities. So a sensitivity on an extension is fine, not on the high, because this could be shared. You see one here as well. See this candle close was on this line. So not this candle, ignore this one. There's one right here and there's one here. This shows sensitivity. We had an order block. We had our sweep. So in this case, the sweep was above the low, which is fine. Order block, fair value gap in the fair value gap GB level. Order block in the order block GB level. We're tapped in and we TP'd at EQ. In this case, we had a sweep of equal lows. We had an order block in the order block GB level. We had a fair value gap. Now, in this case, the fair value gap was huge. I don't mind if the fair value gap is from the fair value gap GB level to the liquidity void, but in this case, it also covered the order block. These are the edge condition trades which you need to understand in order to make a decision on whether you trade or not. Ordinarily, I would not take this trade because it could be random candle formation looking like a golden bullet. However, I know that high impact news had just hit after this sweep. This is why we had high volatility. This is why I was happy to take the trade. To begin with, I would only take golden bullets if they look cleaner. Once you start getting familiar with the golden bullet, you can start logging these in your playbook to understand whether you want to take these trades or not. But these are the edge conditions that you must experience in order to understand whether you want to take a golden bullet or not. In this case, we had a seek and destroy day. So many traders got chopped up in the accumulation or in the two-sided manipulation. However, as golden bullet traders, we are very patient. There were no golden bullet entries here. Our entry was here. We had a sweep of liquidity. In this case, it was M5 internal liquidity that was swept. We had our order block. In the order block GB level, we had our fair value gap. In the fair value gap GB level, we got close to taking profit. We reversed. This is why we never move our stop loss. It waited for high impact news, TP'd us, and then it consolidated for the rest of the day. This is a reason why the golden bullet is effective. It keeps us out of bad trades sometimes, as long as we stick to the rules, right? And it should TP you at EQ. This is why we always TP at EQ. But the main lesson from this playbook setup is we never move our stop loss to break even. We always keep it at the initial high or low. In this case, we had a market maker model. So we had the initial consolidation, the smart money reversal, which then produced a golden bullet on the right-hand side of the curve. Now, this is my book of truths trade because what did I do? I know I'm supposed to TP at EQ. However, my ICT voice in my head was saying for a market maker model, you can TP below the initial consolidation. So I had extended my take profit. What happened? It went to EQ and reversed on me. And then I saw so many instances where I would have liquidity just underneath equilibrium. It would ignore my liquidity, go to EQ, and then reverse on me. This is why we always TP at EQ, and this is in my book of truths to remind me to always TP at EQ. I'm now a firm believer that the algorithm does not see liquidity. It creates liquidity at key GB levels, but it will only attack the equilibrium and the key GB levels. So the lesson from this book of truths trade is we always TP at equilibrium, regardless of where the liquidity is. This is the high probability place to TP. And this will give us our 1.93. We do not take partials. We do not leave runners. We take the 1.93 every time we get it. This is how you build your account. This is another trade in my book of truths. In this case, we had the sweep of liquidity. We had an order block. and we had a fair value gap. But the trade did not tap us in before we went to equilibrium. I was supposed to cancel the trade. I know if it goes to equilibrium without me, I'm supposed to cancel the trade. But I was in a bit of a FOMO mood. I held the trade, tapped me in, and then it stopped me out. Right? If price action goes to equilibrium without you and it doesn't tap you in, we must cancel the trade. It is not a golden bullet. It is more likely to be random price action that looks like a golden bullet. So look at the size of this fair value gap first. That was a clue. Right? We had a huge fair value gap there. And the candles are big also. Right? For this reason, it's in my book of truths to remind me every trading session that if I don't get tapped into a trade and it goes to EQ, we cancel the trade. Always remember this. This is another trade from my book of truths. So in this case, we had the sweep of liquidity. We had the fair value gap. I was tapped in and I was stop lossed. When I reviewed price action at the end of the day and I looked at this trade with a calm and fresh mind, I realized that this was not an order block because there is no candle body in the order block GB level. Okay? This again was random price action that I'd misinterpreted as a golden bullet. Right? So your job as a trader is to differentiate between random price action and golden bullets. Now, if you see a trade like this is very obvious to you now that this is a golden bullet. But your experience will lie in seeing so much price action that you start finding these edge conditions. Once you find an edge condition, you must log it so you do not make the same mistake again. So I look at this trade before I trade for the session to remind myself of the trades I do not want to take. The playbook and the book of truths is key to your trading. You must keep a playbook and a book of truths. And if you go to the mentorship server, you will see a number of my playbook and book of truths trades. Do study those to understand what good trades look like and what bad trades look like.